Happy New Year, everyone. It is 8:02 a.m. Chicago time on Friday, the 30th of December 2022. Happy Friday as well. This is episode number 2383. We finished the year with today's broadcast. Thank you for being a part of this for as long as you have. Really appreciate it. Love the feedback, the interaction, the participation. Um, Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's where we are today. We have slight risk-off sentiment. The market is kind of still dealing with yesterday's rally back to balance and is kind of sideways. So just look at where we are, 3850 again in the S&P and below 11,000 in NASDAQ and around the 33,000 mark in the Dow. This is a market that's kind of still churning in my opinion, although yesterday looked like it was just going to be a big rally, but it's balanced. We'll look at that in a minute. Key events, Bank of Japan, an unplanned bond purchase operation for third day in a row. They call it the Japanese bazooka, and the expectation is the currency market's going to have a pretty severe reaction to this when it fails to work as is anticipated. China's central bank promises more policy support for the economy. Apple manufacturing partner Foxconn plant back at 70% capacity and cranking those iPhones out. In terms of events, calendar events, really not much on the calendar this morning. We did get some numbers out of Great Britain, China's current account final, and we're looking for Chicago PMI. Chicago PMI today is expected at 40 at 9:42 a.m. to subscribers, 9:45 to the public. So if you're in a position at 9:42 and you don't have cover, pretty good idea to just get out of it and reestablish it after the number. And then this evening at 8:30 p.m. Eastern, we're looking for China's MBS manufacturing PMI, expecting 48. This is a significant number as well. And that wraps up the week, the day, the week, the month, the year, all today. And so we're likely to see this afternoon at some point. There's quite a bit of there's some interesting stuff going in options, and options have been really, option volume has just absolutely exploded during the pandemic. The average Joe is actually trading options, and so you have these zero DTE options, you have weeklies, you have dailies, it's pretty insane. But coming into today, there's some really large open interest that has to be removed, has to come off the books. So there's likely to be quite a bit of gamma in play here. So there may be some pretty strong directional moves, OTF type moves on the close today. Just in addition to the fact. That we have year end, month end, quarter end, year end, all happening today. So this is all very important that we pay attention to that. This is actually a good day not to trade. If you don't need to, if you've got better things to do. It's a great day to do your end of year assessment and to do some goal setting. If you can get that far today, it is better to spend the time on that than to trade today's action. There is likely to be some pretty decent volume here. It's not going to be a holiday kind of trade, I don't think. So we'll see. Let's look at the S&P now. The S&P, as you see in front of you, was trending down, but really it's in balance. 142,000 contracts. The inventory is 100% short, meaning 100% of the volume so far has traded below yesterday's close. The range is 28 points, which is pretty modest. So That's where we stand. We've shifted the point of control a lot higher than we had it yesterday, 28.5750 currently, and we're trading right up against the low here. The low is 43, and the S&P is trading at 46, 46 and a quarter. Let's take a quick switcheroo here and look at what we talked about yesterday and what actually happened yesterday. The key element yesterday was that we're very, very likely to breach or to test the 45 to 50 area. And I talked about if it holds that 45 to 50 area. I don't remember where I did in the video. I did talk about it though. If it holds that 45 to 50 area, then we are very likely to push higher. So this is it right here. This is from yesterday, 45.50. So nothing for me to do until we test the 45.50. If it tests the 45.50 and we have a weak pullback, then the idea is to get long into 60, 73, 80, then 3,900. That's the map. And so here's what we actually got yesterday. There we opened at 34.75. We had a small pullback and then we pushed right into this 45 area, okay, and then squeezed to 55, pulled back. So this is a relatively weak pullback to right here to 45. So this is the trade right here, right there. They're not always this picture perfect, but we had a nice push. We got good separation between VWAP mid and the price action. We are above the open. We had a weak push down. We could see the buyers are in control. We could see the 45 is right here, and that prior screen from yesterday's plan squeezes through to 55, pulls back very slowly to 45 for a long, and now we're looking for 60, the MC point of control. We're looking for 73, 75, and we're looking for 80, and then ultimately we're looking for the double O, which never happened. And so it got to this 80, nice little scale out here, just a beauty, and then just nothing into the rest of the session. Essentially, just from about noon Eastern onwards, you might as well have taken a nap. Nothing was really going on for the rest of the session. We ended up with a P-shaped profile. This is a legit P-shaped profile because we started in a stem and we finished in the loop up top. This is a short covering profile. This is essentially an aggressive push higher back into balance. So that's the zoomed in version. Now let's zoom out a little bit and look at the TPO detail. And I posted this chart, if you recall, on Twitter, and I showed it to you yesterday. You know, we had the CPI, boom. We had FOMC, boom, boom. And then we have a market that's terrified of what's next, boom. So this is all imbalance, and it's impulsive. The eye is convenient here. Imbalance, impulsive down. So balance to imbalance to balance, and the balance point is 38.60. And the day before yesterday, we opened, we tested higher, and then we looked like we're going out of balance. So we're becoming initiative selling, right? If you recall, on Wednesday, it just looked like sellers were in control, and I had warned not to lose the big picture. Because we are still in balance here. And what do we do yesterday? We opened right up against the point of control the prior day, right there. This is the open, the little green arrow, and we move back into balance. Isn't that a beautiful thing? This is how an auction is supposed to work, okay? And the way I know that the balance is turning to imbalance is you get this sort of thing where we just move out of balance. We have initiative selling out of balance, usually a B-shaped profile or neutral extreme down type play. So that's what we got here in the S&P. The NQ, it has a very interesting story. So I have integrated everything from December 18th through Wednesday as one profile. Look at what the NQ is doing. Wow, this is a heck of a profile here in the NQ. It has it is basically a looks like a saw. And what is this profile saying? I mean, what in the heck does this say? Look at where we are. We went from this balance zone to the upper balance zone on this FOMC and CPI becoming better, inflation loosening, to, uh-oh, the Fed doesn't like it, falling out of the upper balance, coming back into the middle balance. And what we've done is we've built this kind of a wild looking, alien looking profile here. And what this profile is saying is that there's active price discovery through the range. So what we have is everywhere between 11,380 or so to about 10,9. There's active price discovery, and the market is really aggressively seeking balance here, and it's not found it yet. So what the NASDAQ is set up to do is it's very likely to keep jumping from shorter term, within this MC, from balance to imbalance, making it through the valley to the peak. That's yesterday. Look at this. That was yesterday. To the valley, back to the peak, maybe some other day, and to the valley, to the next peak. So you as a trader, you are watching for what does it do at these valleys. Does it clear the valley? If it clears the valley, then I'm looking for the next area. Okay, got to the next area. Does it come back through this valley? And if it does, then I'm looking for this area. If it clears this high volume node and through the valley, then I'm looking for 11,160. If it clears this area for like that, that's what it is. It's kind of like having a bunch of composites kind of connected together. So NQ, very active price discovery, really more bearish than other products. It's got some heavy components in it that have been smacked around, Tesla and so on. And so it looks a little bit different, okay? So for the TPO profile of the ES, really look at how balanced that is. I mean, how beautiful is this? This thing is basically sitting right here in balance, and today is no different. Now I'm expecting that today we're likely to go directional for a bit as we balance out the end of the year, clean up our books and things like that into the end of the year. But overall, I'm looking for this thing to kind of, even if it squeezes, just be prepared for it to reverse quite quickly. This is what we learn from these profiles. This is what's likely to happen. Here's the S&P again on a 30-minute. Look at what it's done. It really isn't, there really isn't all that much to talk about. We have our monthly VWAP way up here at 39.80. We're well below. And then this morning, what I'm looking for here, and I could show you the NQ. The NQ, I'm looking at the hourly. See that NQ really moving from this upper region to the next region, to the lower region, and it's very likely to move back up to the upper region. It's a pretty straight up kind of I don't want to say it. It's pretty straight up textbook kind of an auction. I'm just going to switch this chart back while we look at the relative delta. The relative delta today, action so far since the cash open. Remember, I'm in Chicago, so the market's open at 5 o'clock at the exchange. From the open here, what we have is a market that's gone sideways. Delta has gone sideways. Market started to sell off. Delta selling off. Market has poked right back up almost to the open. Delta went back to zero, and now it has fallen off. Delta has fallen off. So Delta and price are moving together. Whereas if you look at the yesterday, look at that. strong movement upwards, cratering delta. Okay, this is typical of a balanced zone. So you need to step back when this sort of thing happens. You need to step back to a bigger time frame and ask yourself, am I looking at something that is moving directionally but within a balance zone? Is that why this is? So this is, this is kind of typical in what we would see in a micro composite, and that's what we got yesterday and today. Really, price and delta moving sideways. No commitment from either side. No commitment to have no commitment from either side this morning. I think the market's simply going to wait to see how the end of year adjustments look like. There isn't anything that's being committed pre-market, so I'm expecting a fair amount of volume today early on, but we'll see when the move happens. There's just no way to tell when it's going to happen, but I'm going to tell you that the close is going to be a freak show today, most likely. So here's the S&P. Let's take a look at what's expected for today. Let's go back to our usual colors. Get back in the routine. Mexico threw things off. So what we have is open, test down, pull back, continue, right, so far. And what we're looking for is a market that is very likely to just continue on that path. I'm not expecting it to change its tune here. We finished yesterday with the point of control way down here. We finished with the point of control way up here, settlement up here, and we finished 2 days ago with a point of control way down here. So there are clear targets above and below. This is very likely to open sideways. We're opening towards the bottom end of the range. I'm looking for a responsive buying back to 38.60 up here, and I'm going to be watching for any reaction that puts me against the VWAP and the mid. I'm looking for any reaction here. If it's weak, then I'm looking for the weak retest for a short back to the open, and then an extension of the overnight low for the overnight low stat, and then for a move potentially back towards this very, very weak close from 2 days ago. So I'm looking for the market to clean this up down here before we close. That's the primary scenario. The secondary scenario is obviously the opposite. Open auction, test down, consolidate for a little bit, find a base, looking for an impulse higher once it gets done, pushing to the downside, squeeze through the 60, pull back. The 60 sets us up just like it did yesterday at 45 for a long. Then we have a gap to settle trade into the 71, right? And then from there, we're looking to close the 77, 75 point of control and to push that 80 again, and then 3,900 becomes the target there. So what does it do at 60 this morning? Yesterday it was 45. We're opening at 45 today. What does it do at 60 this morning? That's the key that I'm looking for. Okay, try to finish the year. Without too much frustration. Don't give up a lot to see if your trades work. Remember, your stop is nothing more than the token or the ticket you need to buy to participate in the next move. And remember that you need to get 5 components right. The fifth is always given its time. But really, 4 components must be right for every trade to work. Each one of these, if any one of these is wrong, your trade isn't going to work. So it only takes 1 out of 4 things to be wrong for a trade to be stopped out. Those are bias, meaning direction, your entry price, your exit price, and your stop all have to be correct for that particular move. Okay, so again, in order of importance: bias, stop, entry, target. Those all have to be balanced, and your stop and your target have to have a good R factor so that you can survive a series of losing trades. Those are, The holy grail and the nutshell of trading is right there. That's what it is. And so our job is to figure out what is the bias within our time frame. Can I get a scale out before they get my stop? If I can, that could be a viable trade. And if is there a chance, what's the chance that I can get my target? So I can cover multiple stops on my next trades. If that's a viable opportunity, then great. My priority, because I'm a scale out trader, my priority is always to cover risk and let whatever runs run. Okay. Good luck today. Thank you for participating this year, and thank you for your feedback. If you have questions I haven't answered, just hit me up on Twitter. Again, you can find me at twitter.com/futurestrader71. You can also find me at convergenttrading.com, or if it's brokerage, clearing, trading, platform related, you can find me at edgeclear.com. Good luck. Cheers.